we just had the biggest earnings in open history, guys, okay? I told you this will be the biggest turnaround story. I was pushing out content every single day for you guys because I believe this is just the beginning. Pre-market, we are up about like 20%. And I also said the CEO is motivated just to bring the stock price up, which is the best case scenario. And here's the clip where he said exactly that on the earnings call. Have a look.
Look, I'm just answer your question a bit personally first. I am very highly motivated to see Opendoor's stock price go up, right? My family is the most levered family in the world on Opendoor stock. My salary is $1, and unless stock levels see levels they haven't seen in years, I don't get paid. So I don't want you to take what I'm about to say the wrong way, but I just want you to let me say this. I don't manage the stock price. I manage the business and look at what we're building. Now, my responsibility is to create shareholder value. That's literally my job, to create value for our shareholders, whom I deeply appreciate. But I fulfill that. I fulfill my responsibility by not looking at the stock price every day. I fulfill it by building something people want and value. The stock price will follow. It literally always does.
So as you can see, this is crazy, okay? We will not only talk about, we will do the biggest deep dive on the earnings of Opendoor right now. Let's dive in.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video here on my third channel. You should follow also my first and second channel. I'm looking for companies that can absolutely explode, okay? And with that, I thought a couple of weeks ago, now is a good time to entry open, okay? And I entered, the earnings were great. It was just a matter of time that actually the hard work of the new Open 2.0 team is working, and Kaz, his team, his efficiency, we will dive into all of that. But before we diving into that, make sure to check out xtendaytrading.com. If you like the long term, you should always benefit from the short term as well. And we created our group where we have a specific software that we built by our own, where we invested over $1 million to create this. Well, and this allows our professional day trading team to select trades, send them to your portfolio, and sell them also in your portfolio. So that means that we do all the hard work. We spend hours and hours in front of the computer and in front of the market to give you the very best trades. Okay, now with that said, let's talk about what actually is going on with the first clip.
Good afternoon, everyone. Early in my career, I used to write a plan that told my team what we were going to get done during any given cycle. Then at the end of the cycle, I would go through the doc and color every sentence of the plan, green, yellow, or red, based on whether we had done what we said we would do and if we were on track to go where we wanted to go. I've kind of always found it useful to write things down so you can hold yourself to account. With that in mind, I'd like to remind you of the last financial open house. In my first open house, I told you that we had a 4-step plan to turn Opendoor around with renewed energy. Let's go back in time and listen to what I said. So here's our 4-step plan to channel that energy. First, by the end of next year, we will drive Opendoor to break even. We think about this in terms of adjusted net income on a 12-month go-forward basis. That means Opendoor will start generating cash and will never be forced to raise equity ever again. Second, we will drive significant positive unit economics while increasing the velocity at which we transact in homes. This includes launching financial services like mortgage. Third, as we increase our unit economics, we will change the company's focus from primarily building channels to transacting directly with buyers and sellers. We're also going to focus on reducing our days in possession rather than arbitrarily increasing spread, which has had genuine significant negative consequences for us. Fourth, once we've accomplished the first 3 steps, we're going to focus on allowing buyers and sellers to transact on Opendoor without having to buy or sell from Opendoor. This is going to significantly lower our capital risk but more importantly, it's going to give folks options they want. Today, I want to grade Opendoor against these 4 steps, and then I'll give you some details. Here's the bottom line. We did what we said we would do, but let's go through this line by line. So, we're on track for our first step. We're driving Opendoor to be adjusted net income positive by the end of 2026 on a 12-month go-forward basis. The goal is simple. Start by generating cash and never be forced to raise equity ever again. Second, since September, we've increased our acquisition velocity by 300%. We bought 537 homes last week alone. In the last week of the third quarter, we did only 128. And we grew while we drove significant positive unit economics. This improvement is a result of deliberate change to our product, our pricing strategy, and our operations. Most importantly, our October 2025 cohort, which is the first full cohort under Opendoor 2.0, and is the first one with enough sell-through data, is performing really well. I'll get back to this in a second. Third line, we grew our D2C acquisition contracts while reducing our average days in possession. Comparing this last week to the last week of the third quarter, we've grown our D2C acquisitions by almost 700% and reduced our days in possession by almost 25%. Fourth, we've made it easier for sellers to choose the path that works best for them. And increasingly, they're choosing our capital-light product, Cash Plus. In the last week of Q3, Cash Plus was about 19% of our total contracts. Last week, it was 35% of a much higher volume. To give you a sense, Cash Plus was over 600% bigger last week than it was in the last week of Q3. This is a first step towards our goal of allowing buyers and sellers to eventually transact directly with each other. Christy is going to go through all the details of all the financials, but before she does, I want to say this. We laid out a plan for you. We're going to turn this company around, and we laid that plan out during Opendoor 2.0's first open house. That plan is working. We're green all across. We're already delivering results and are on track to deliver against our mission. In a minute, I'm going to tell you a lot about our product changes and all the things we've done since Q3. I'm really proud of how fast our team is moving and how much we're shipping. And the list I'll tell you about is a public CEO's dream. It sounds good in a script and it looks amazing in a pitch deck. But look, I know what this sounds like. New products, expanded TAM, ops improvement, pricing efficiencies, and a bunch of business school words like strategic operationalization of North Star and paradigm shifts with best-in-class synergy. Oh, flywheel. Look, I get it. Every public company does this stupid dance that pretends folks can't look at the slope of a graph. One of my favorite investors, Sir John Templeton, used to say, the 4 most dangerous words in investing are, this time it's different. So I'm not going to sit here and say random school words and ask you to believe that this time it's different. This time, I'm going to show you. Our October acquisition cohort, which is the first cohort of Opendoor 2.0 that has had reasonable sell-through data, is on track to be the most profitable October cohort in company history. Again, when it comes to the key metric that matters, our contribution margin, October 2025 is on track to be the most profitable October since Opendoor was incorporated. And we achieved this in the middle of the most aggressive market expansion in Opendoor's history. Given that this isn't really the strongest housing market, this performance, I think, shows a structural shift in how we operate. a shift that I genuinely think will be durable across macro cycles. We are no longer a prop desk. We're now a market maker.
So this is what I love, okay? Not only the company sets goals, second, the goals can be viewed by every shareholder. They have like a specific site for that. Third, every quarter they will come back to the goals and say, did we reach that goal, right? Did we make good on our promises? And this is one of the most transparent ways you can run a company, which is absolutely brilliant. I'm so happy that I just got into Opendoor. I had patience. I said I will not buy at 8. I had this on my watch list since like 5 or 3. I don't remember, like 4 or 5. Then it went to 10. I said like I will wait. There will be another opportunity. And now I believe that we just saw the lowest point for 2026 for Opendoor. And we will just go ballistic from here, okay? And he also talks about that this is the best quarter, not only since they joined with his new team. He has a new CFO, new Chief Growth Officer, new COO. So as you can see, this is a totally new company. And that's why I'm begging every single day on this channel. Guys, look into Opendoor, make your own research. And if you like that story, then you should be into it, okay? Now, let's dive into the second clip because it's getting better, okay? Because after he said that this was not only the best October that the company since the turnaround had, but ever, okay? The number is just exploding, okay? But we will dive into that a little bit more in the second clip.
But I kind of want to take a second to talk about the most important part of it. As Vinod Khosla says, the team you build is the company you build, not the plan you make. Today, 18 people report to me at Opendoor. Of those 18, 10 didn't even work at Opendoor a year ago. Our 10K filing has a list of our executive team, and you can take a look at it. Not a single one of those people on that list was in our last filing. Since I joined Opendoor, we have a new chief operating officer, a new CFO, a new president, a new chief growth officer, a new chief people officer, and a new chief business officer. This is a world-class leadership team that I would put up against any other tech company. And on top of this, Opendoor 2.0 is the single most AI-pilled company in the public market that I know of. Let me give you an example. Not that long ago, after we bought a home, someone on our team would sit at their desk and manually pull up data from 5 different systems. Things like property records, inspection notes, HOA docs, pricing history, contract terms, stuff like that. And they would copy these things field by field into a seller disclosure PDF. It took hours per home, every single time. Last week, someone at Opendoor shipped an AI workflow that does all of this kind of automatically with no humans in the loop. It queries our data warehouse, cross-references inspection history, and generates a plain English disclosure summary, fills a compliance PDF, and then sends it out for review. But here's the best part. Other companies talk about how AI native their engineers are. The person I just talked about, that person is not an engineer. He works at our ops team. He built this in his spare time in a week. No ticket field, no sprint planned. No one asked him to do this. He understood this simple fact. It's wartime. And our primary weapon is our ability to prompt machines to create a new world. And he's not the only person doing this. Our ops team, sales team, compliance teams, they're all building their own tools now. Now, if this is what our ops team does, I want you to imagine what our engineers are up to. So when I say we default to AI, I don't mean engineers use CoPilot. That's not what I mean. Opendoor is a different type of company. It's a company where everyone is learning how to think like an engineer. Okay, with that, let's talk about what we built. We shipped a lot in Q4. I'll try to move through this fast, but I want you to see how what we shipped caused the October results. Okay, we shipped across 3 fronts: better products, bigger markets, and stronger margins. And we did this, well, faster. First, we made our products better for buyers and sellers. For years, Opendoor's product was a one-size-fits-all product. You want to sell a home? Here's an offer. Take it or leave it. But look, all sellers are not the same. Someone with 80% equity in their home doesn't have the same needs as someone with 20%. But under the old model, both of these folks paid the same fee, which means that we were taking on risk that neither side wanted. The seller didn't need it, and we didn't want it, but the product forced it. That's not a pricing problem. It's not an underwriting problem. It's a product problem. So we fixed it. We now put the ability to change the offer that fits your needs into your hands. You choose how much cash you want upfront, and the fee adjusts. Take less upfront, pay less in fees, often a lot less. Every dollar that a seller does not need upfront is a dollar that we don't need to put at risk, and a dollar that they don't need to pay for. So they pay less, and we make more. It's a win-win. And it also allows us to serve customers that we could have never served before. This risk reduction, it allows us to do something else too. It allows us to tighten spreads on our core cash product. It's early, but from best I can tell, this is working. We're seeing demand that we would have never seen before. And because we're seeing a lot of extra demand, we also launched our self-assessment app. With our self-assessment app, the seller takes pictures of their home and AI does the assessment work. No humans needed. And because there are no humans in the loop, in January, we nearly doubled the number of homes that we assessed compared to September. And so far this month, about half the homes we've assessed have needed 0 people to show up at your doorstep. On top of this, we expanded our buyer products, Opendoor Checkout. As of this morning, it is now live in 40 states. Opendoor Checkout embeds mortgage pre-approval directly. It also supports Opendoor's Heroes Home Credit, where we give the brave men and women of America's armed forces $4,000 towards closing costs of a home. Opendoor Checkout also includes the Opendoor Guarantee. It allows for free cancellation, warranty, and early move-in. We also launched our Seller Guarantee. When a seller sells us a house using Cash Plus, they now get a chance to make sure they like how we are selling the home. If they don't, they can just undo the transaction and take the home back by paying us a low restocking fee.
So when Cass talks about open, there's always the discussion about AI. AI, not in a way that they, create like an AI product, more about the AI implementation. And if you want to start to make your company extremely valuable, extremely efficient, and extremely profitable, you need to incorporate AI. And there's no other company that does this better than Opendoor. Okay, Cass says this all the time. We are the company that have the biggest AI implementation of all of them, of all public companies. Okay, like every single, from the smallest manager to the highest guys in the C-level, like the CFO, CEO, CRO, or whatever those, COO, CGOs, Chief Growth Officer, all using AI. Obviously, all the engineers as well. But I believe that this is so important because you can have much more done, as he said in a couple of examples. You need less people. You can create your own tools. So he goes through every single microscopic process and say how I can make this a little bit better, how I can make this a little bit faster, how can I make this more efficient, how can I make this more profitable. And that's all about this. Okay, let's dive into the last clip.
Outside the core product, we also expanded our growth levers. To start, we dramatically expanded how many people we could serve by expanding our geo coverage and our buy box. It took Opendoor from 2015 to 2025 to become available as an option for about 1/3 of the homes in the US. 10 years. Opendoor 2.0 almost tripled that in about 10 weeks. Thanks to AI, Our product went from being available to about 1 to every 3 homeowners to being available to nearly every homeowner in the lower 48. Now, you would expect that that kind of rapid expansion would introduce risk, sloppy underwriting, margin compression, operational blowups. We saw the opposite. You'll hear Christy talk about our margin guide points in a bit, but the new system is working, and it's already generating thousands of incremental qualified leads per week with zero incremental marketing spend. Making this work well required us to build across almost 200 MLS data sets, coordinate over 100 brokerage regions, and expose 150 standardized listing attributes. This was hard work. But we believe software should not be limited by zip codes. And as we expand our product, we also significantly improved our data ingestion. We now have a nearly real-time data ingestion with over 1,000 pipelines. They serve our new market-agnostic pricing tools, and we also have a new ML model that predicts customer conversion propensity at the time of underwriting. It uses like a dozen different data points so we can best target our sales and marketing efforts. And because we have all these new potential customers, we also focused on making sure we can grow profitably. I want to tell you something a little counterintuitive. Usually CEOs get in front of investors and say, we're focused on cutting costs. And usually that doesn't work, and actually it increases costs. So we didn't do that. We didn't focus on cutting costs to improve margins. We focused on improving the product and taking pride in our code. And the costs started disappearing, kind of on their own. Look, products frequently get better by removing things, not adding them, by deleting code, not writing it. So we deleted a lot of things. They just weren't needed. Last quarter, I talked to you about the actual debt that was weighing down the company. We're now focused on a different kind of debt, but one that is just genuinely equally pernicious. There's a concept in engineering called tech debt. It's the accumulated cost of every shortcut, every extra layer, every microservice that was added for no goddamn reason. This tech debt across the entire stack is the reason that it's 2026 and connecting an office printer still feels a little like defusing a bomb. And honestly, before the recent changes, Opendoor wasn't that much better than your printer. We weren't just carrying tech debt. We were also carrying organizational debt. And the interest payments on these bad decisions were just killing us. So we started paying this down, and the results are just wonderful. When Opendoor entered 2025, our annual run rate costs on hosting was $12 million a year. Exiting 2025, Opendoor 2.0's cost on hosting infrastructure is less than $5 million a year. We haven't just significantly cut the cost of providing our products to our customers, we've also made the product better. We also significantly increased the sample set used in our valuation model while decreasing our cost. This means that the runtime in our model was reduced by about 50%, from 12 hours to 5.5 hours. The entire pipeline can now run in a script that's about 50 lines of code, and the feature building DAGs are now 90% cheaper. This saves us at least $1 million a year. We also replaced third-party tools with in-house vision models for thinking through home conditions. Not only did this save us a few $1 million in backfill costs for large-scale experiments, it also brought a core AI capability fully in-house and cut the processing time for 100,000 listings from 34 hours to just 4. Cheaper, better, faster. On top of this, we also cut over $1 million in cost by replacing SaaS tools with more cost-effective and genuinely better AI alternative. And we stopped paying for tools we barely used. land and expand SaaS no longer works inside Opendoor. And we didn't just cut costs.
So the most important for a company is always start with the client. Does the process gets better, faster, nicer for the client? Okay, the client is the number one thing. A company without clients is not a company at all, right? So no revenue without clients. Do you want to have a fantastic product where the people say, wow, not only I sold my house or bought my house, but also the turnaround was much faster than I got used to if I used it on a regular basis. I will talk about my neighbors. I will talk about to my friends about it, right? So this is such an important effect, and this is what Kaz is saying. We got faster, better, more profitable, more efficient in the client spectrum first, which is super important. Also, they talk about a lot about the unnecessary costs and evolvement and to make it more complicated, right? They reduce the people that do tasks. They got rid of all the SaaS tools to save millions of dollars. They got so much AI implementation that it's absolutely the first of many great quarters, and we will dive another deep dive tomorrow on this channel. So make sure to subscribe. Check out xtendaytrading.com if you want us to trade for you all automatically with our AutoPilot software. We have a whole team. We are raising our joining fee every single month. We have limited spaces. Check on the website. We have just a couple of left. Make sure to check it out. And I see you obviously tomorrow for a brand new video here on this channel.